Hello and welcome to Options Guy TV. My name is Brian Overby. Happy Halloween to everybody out there that happens to be hanging around on a beautiful October 31st, which happens to be a Friday, which I found out that every 6 years there is a Halloween that falls on a Friday. So it's a very scary one tonight. I'm a little bit nervous going into the evening. We got a full moon out tonight, and it's just going to be a nutty night and a lot of fun here in Charlotte, North Carolina. But let's have some fun with the markets right now. The markets just can't stop having fun. We keep setting new highs. We keep just rocking and rolling. The VIX keeps getting beaten down. Earnings seem to be strong so far. The Meg 7 has done pretty well. Banks are doing well. I like the healthcare sector a little bit. I think that that's the one sector that's gotten a little bit beaten up that that is set for a rebound. I guess if you're looking for some bottom fishing, that's the one sector that I'd be interested in. That obviously the government shutdown is a big deal, and a lot of it is about healthcare and funding the Affordable Care Act. That's one of the biggest things that is being debated in the halls of Washington. So I'm going to do something a little different. The last couple of Wednesdays, first of all, I want to mention this, that we've been doing something different through Tradier and through the Tradier Hub, just doing a little bit more short snippets that are just about the trade. Today, so on Wednesday, I actually did a trade in Amazon, and it was an open wing butterfly. Obviously, well, it was a call side, so it obviously did fairly well if you look at where Amazon is at and what it has done after their earnings report. And next, we're going to go in and look at, I'm going to take some of these stocks that have done well, Amazon being one of them, Google being one of them, and we're going to sell some premium against them. In other words, we're going to go out and sell short put spreads to lean into the bullishness. And I'm going to do them 2 weeks out. Now, a lot of times if I'm going to do a short put spread, I will go 45 days if I'm doing it on a general basis. But this is kind of be an experiment where we're going to look to do them for 14 days and probably get out a week later. And we're going to follow them. And then part of it is about the show. If I go out 45 days, a lot of times the trade just gets lost. And forget to talk about it or bring it back up. So this time around, we're going to go in and look at a couple of, selling just at the money short put spreads on 3 different stocks that have all had a decent earnings report. And one of them is Chevron. So let's run to the Tradier Pro software. And Chevron today had solid earnings this morning. CVX, it's up it's at 158.12, up 3% on the day. Pretty good move for energy company. Still obviously like the space, and it goes right hand in hand with AI. So now energy and AI are kind of tied into one another, talking about the bandwidth that is needed. We're going to go to the November 14th expiration, which is exactly 14 days away, and we're going to sell a put spread, and we're going to go 5 points wide, and we're going to bring in about $1 on that trade, fairly close. So here's the put spread that we're going to look to put on, and we're going to come back next Friday, and we'll look at these things, and we'll think about getting out of those trades at that point in time. So here's what the 3 trades that I want to put on. So to start with, we're going to sell the 155 strike. So we're going to sell something very close. I like the 157 better. Let's go. And the market's up a little bit more than I first anticipated. So we want to sell something at the money. And here's the thing is, I like to sell more at the money, put spreads and call spreads, and get that premium as protection. Now, I'm doing this as an alternative to a long call spread where you're buying it and you have a lower probability of success. Taking advantage of the fact that you still have some decent volatility that has came in after the earnings report. We're going to try to sell some of that. in Chevron, it's kind of hard usually to just sell anything just because vols are fairly low in it. But we can do that here. So with the stock at 158, we're going to sell the 157 strike put. Let's get rid of this one. Hit buy. And then we're going to go down 5 points and we're going to buy the 152.50s. Okay. And buy that one. And we're bringing in $1.50 on that. I like that. I like that better. I like that better than doing the 155. Okay, so we're going to lean into the bullishness of the earnings report. We're going to sell the 157.50, buy the 152.50. We're going to go out 14 days, and we're going to send this to the what if calculator, and that is going to be short put spread number 1. And we're going to put 3 of these on today. All based off of companies that have had decent earnings reports. So then the next trade we're going to look at is Amazon on this scary Friday. Stock is at 246.31, 246. Okay, so we're going to sell the 245s. We're going to hit that bid, and we're 245. We might go a little bit. We're going to bring in some good premium. If we go to 240, yeah, I don't mind that. All right, we'll keep it simple. Let's do that and sell that. 197 for a 2-point wide. Okay, so this will be the second one. We're going to bring in. We brought in 150. I'm going to write that down, and now we're going to bring in. We'll call it. Let's make it. Yeah, I saw it too. We're gonna. I get that too. I saw it. Saw the 2 pop up. So this is going to be a $2 credit. 145. 246, yeah, okay. And we're going to send this one to the what if calculator, just so that we can keep track of it. And that's short put spread number 2. And then also been riding into the Google. I've been bullish on Google for quite some time, actually. Own a lot of Google in my own account. Just thinking that they would get the AI thing right, that they weren't going to, they had all the money in the world to figure it out. I still, I still have a memory. It's kind of funny because I remember when Facebook, got their app up and running, and Facebook was just the thing. Then they were like, well, they're not making any money. They got to figure a way to monetize the platform and all these users. And you're like, well, they just came public. They were trading around $20, and the stock got beaten up because there was no advertising. But they now had $1 billion to basically go out and figure out what to do with it. And it dropped down, and I remember buying it at like 15, and then it doubled, and I sold it at 30. Well, that was obviously a mistake. But in general, I've been back into Meta nowadays. But the concept just was that you're Google, you have YouTube, you have the control of so much data. You have the best algorithm to try to figure out where people want to go. You are seeing what people are doing. You are forcing them to set up a profile, a Google profile. Every time that you don't use Google on search, it asks, do you want to use Google or to use Chrome as your main browser? They have control of this area. They have money. They made mistakes. They were a little bit behind on the AI thing. You could make that argument, but you don't think they're going to figure it out? They've had some headwinds, and they have some competition. There's no doubt that's out there, but do you think they're just going to let it all go away? It was trading at the lowest valuation of any of the Mag 7s that are out there, trading at about a 24 PE. Well, we're getting a lot of the other Mag 7s trading 30, 40, 50 times earnings. And, and they have done a way better job, and they figured it out. And, Gemini, if you go to their Gemini AI search platform, everything's free. You're not paying for it. All you got to do is sign up for it, but they're getting all that data, and they're going to be competitive. They will be. Now, is it possible? There are stories, you go back to even AOL and the internet, like there was no way that AOL could ever get taken over. Well, they did. But Google has been just a resilient company forever and ever. They don't try to go out and manipulate their stock price. They say what needs to be said. They don't mislead anybody to try to drive up their stock price. They just function as a company. There. All right. I'm going to go out and sell a put spread. I'm going to sell a put spread on them. Now, obviously, the stock will probably go down because of my little rant this morning. But 281, they did very well after earnings. The strong, like the chart, that's probably one of the strongest moves to the upside. Yeah, there we are. Let's zoom in a little bit here. We went from 225 all the way up to 245. So basically from the bottom of this candle to that candle, it's up 20 points at this point in time. So just a real strong move after. Oh, that's Amazon, which did the same thing. Google did the same thing. Sorry about that. 281. Okay, so we went from down here when they announced, we're right around 265 all the way up to 281. High that we hit was 291 at this point in time. So let's hope that this trend continues. We're going to go out and sell a 280 strike put. And the 282, yeah, let's sell the 280s, and then we'll go down 5 points and we'll buy another one, and we'll keep it the same. So let's sell this one and go down 5 points and buy this one. $275, buy to open. Okay, $2 on that trade. So these are the three trades. These are the scary trades we're going to put on three stocks that had very strong earnings moves. I kind of like this play. We're going to go up to 14 days. We're going to come back in 7 days. We're going to look at the trades, see where they're at. On this type of strategy, though, I'm not looking to adjust it. We're going to put what I would do is put this position on. You're bringing in $2 and you have $5 worth of risk. In a way, you're almost, you're a little less. You're about a 40% of the total premium of the trade. And as far as the width of the trade, you're doing 2 divided by 5. You're looking at 40% of the width of the spread overall. Solid. That's a solid premium to bring in and be a little bit out of the money. Like, I like the Google trade better than all of them in that you're at the 280 level, you're doing 275, you got 5 points. If the market goes against you and say that it does start trading for $3, where you're down about half of the premium that you put into it, you can get out of the trade. I prefer to put these trades on, bring in good premium, and let the trades run, and then manage the lot or the upside if I can get out of the trade. So, for example, if I put it on for $2 and all of a sudden it's trading for 50 cents and I could close it, I would like to close it and then on a 14-day trade, roll it out to another 14-day trade. So take the profits on the upside. If it goes against you, you let it run. But if I'm doing the profits on the upside, I'm going to continue to roll that position and manage that position to the upside. So even if I put it on for $2 and it gets between 50 cents and $1, think about rolling the trade. Obviously, you're going to look at the chart, try to figure out if this is the timing as to when you want to do it. But that's the way that I'm going to approach this trade. So we're going to come back in a week's time. If we're up, we're going to do it on the downside. We'll look and see if we want to get out of the trade. But by not making your risk reward so egregious, it's okay to let the trade ride a little bit, right? So if I was selling this for 50 cents and I had 4.5 points of risk, wow, that's a lot of risk versus the reward. If I lose that once, it's really hard to try to get those gains back. By selling them and bringing in more credit up front, that means you have less risk overall on the trade. And one bad beat, you can come back and you can make that case to recover that loss. I don't know why I'm struggling with words. Must be the fact that it's Halloween today. All right. So any questions on the trades? I'm going to send this to the what if calculator and we'll do a quick review of the trades and we'll make this a fairly quick Options Guide TV today. And okay, so the only one that I didn't show you today was CVX. And here's the big upside bar. This is probably, I mean, this isn't as strong of a move relative to the chart because we're not breaking out to new highs like we are in Amazon and Google. But if we're in this area, we're at 155 up to 159. It's up about 3%. Obviously, some headwinds if we get up to here, 161, another 3 points higher. We're hanging out right at this level. Yeah, I don't mind it. It doesn't look as strong as Amazon, which has been really strong here. We popped all the way up relative to that recent high there. Let's go out 1,200 days. And you see the strong bullish move, consolidation period, back up. And a lot of it had to do with the web services. Actually, Google is a competitor in that space. And a few contracts have changed around, and that was a big talk. Microsoft is also trying to take some of that share in the AI space. And Amazon came back in and said, nope, we're not going to let that happen. And they had a much stronger quarter than they did the last quarter, which kind of beat them up. And so now we're at an all-time high there. Let's go and look at Google. Look at that new high. And so the stock had, once people got, this was all nervousness about AI and all this choppiness. Now we've had a strong move to the upside. We're still trading at a 27 PE, and that's not forward PE. That's just the normal PE. Still at a decent valuation, even at $282, setting up a new all-time high. Well, there we have it. Let's look at the three trades, and we'll call it a day. If you have any questions, please do put them in the chat box. And I can review the Amazon trade that we did. I'm not quite sure. We taped a video short on Amazon. I'll end up throwing it into my X profile at Brian Overby. But we did an open wing butterfly with calls. So that trade obviously did well. Here is the Google trade, short puts. Let's go send that. This is in the calculator. So we're selling this 80, buying the 275, 5 points wide, bringing in $2 on that trade. Here is the Amazon short put spread, 245. Let's send this one to ticket. We're going to sell the 245, buying the 240s here. $2 net credit too. We'll say it's 2. Let's put it at 2. 197. I would work look at the bid-ask spread, and it's very liquid. I would work it. I think we could get 2 for it. We need the market maybe to move a smidge. 245 by 240, selling that put spread. And then lastly, the CVX trade. We're 150 is what we were at. Going 5 points wide. Not quite the vol, obviously. And a little bit lower price. Probably the price of the underlying is more of the reason why. But we're looking at 150 here on a 5 point wide spread, and that's what we put on. So 2 of them for $2, 1 of them for 150, and we're going to come back on Friday and we're going to manage these. And that's going to be it. Well, you guys have a happy Halloween. I don't see any questions out there. And we'll be back next week. We got some more earnings. We did have over 800 companies that announced earnings this week. So we will start getting to the tail end of it. But we still have some, a lot in the retail space that will be announcing over the next couple of weeks. And we got a few more of the mega cap tech stocks that we'll be announcing here shortly too. So we'll look at some more trades based off around earnings. We'll obviously lean towards my skip strike and open wing butterflies. I always like those around earnings. And we'll be back this Monday for the next edition of Options Guy TV, 11 a.m. Eastern Time inside the Tradier Hub, hub.tradier.com. Hope to see you in the hub.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.